Good morning. It's Monday. Welcome to the most underrated show on YouTube. Let's go. Good morning, guys. Smash the like button for me, or yes, I am going to steal your bike if you don't smash the like button. All right, so after the chaos of last week, everything that happened with the Fed, I don't know about you, but they said that they were going to increase rates 25 basis points by 2020, the end of 2023. So 25 basis points by the end of 2023. What I did on Friday was I just fire sailed everything. 25 basis points but in 18 months. Oh my God. I just sold everything. Liquidate all your positions. Just kidding. I'm totally kidding. That's sarcasm. This is the dumbest thing I've ever seen. For people to react to a market and have literally fire sales and be saying, oh my God, the Fed's going to do this. The Fed's getting hawkish, this and that. For God's sakes, it's 25 basis points. Eventually the interest rate has to come up from zero. Especially if we have inflation that's skyrocketing. These people are just nuts. Everybody's always looking for a story that could just drive the market, good or bad. Just goodness gracious. Anyways, Smithin, that was a great line. Joke's on you. I'm poor and I don't own a bike. Love it. So let's take a look at this. We had a great trading seminar on Saturday. I think I went for about 80 to 90 minutes, something like that. So, okay, the end of 2022. Raise the interest rates 25 basis points right now. Don't care. It's not going to do anything. This is stupid. This is what this is. This is stupid. And if you're going to argue with me about that, I don't know what to tell you. I literally don't know what to tell you. Zero interest rates are not normal. All you have to do is look at Japan. Japan hasn't touched their peaks of their markets back since like the late 80s, early 90s. it doesn't work. It literally doesn't work. And to be the gold standard economy of the world, you want to keep rates at zero? Are you kidding me? Come on, grow up. 25 basis points is nothing. So you're gonna go and pay 3.25% interest on your home instead of paying 2.8 or 9 or whatever the hell it is. Come on. All right, so everybody became rational overnight, basically, except for in like Japan and stuff. The Nikkei was down like 4% at one point, but our stocks are rebounding and whatever. Let's get on to something else. I'm getting a little bit feisty this morning. Let's go to the boom. Nostradamus predicted the world would end by 2020. Well, here we are, Gianni. All right, retail investors. Stock buying boom of 2021 is just getting started. All right, let's see here. This guy what bank is this? Goldman Sachs. He said that he raised his estimate on household net equity buying to $400 billion from the $350 billion in a new note that he just sent out to clients. In the first quarter alone, households were the largest source of equity demand, with net purchases of $172 billion. That's crazy. High cash balances and continued retail participation in the equity market should bolster household equity demand. Yeah, that's probably going to happen. I guess we'll see. You're going to have to. You can't just roll with one thing. You're going to have to couple it with the inflation that's going on, that is becoming rampant. But because of the hawkishness, I love when they say dovishness and hawkishness. Can't we think of better words? These are the dumbest words. The market didn't appreciate the surprising level of hawkishness from the Fed. 25 bips that's pretty hawkish, and they're going to stop doing quantitative easing. Oh, good Lord. How are you going to allow this? How are we just going to allow markets to function like they're supposed to function? Why would you do that? Some Wall Street strategists said it's time to buckle up, as today's market is looking very different from the 1 year earlier. Duh. Although macro influence from the S&P volatility has declined, total macro risk is higher than normal in the past due to the outsized impact of changes in credit spreads on equity volatility. With the yield curve, so this is something to pay attention to. We're getting into that yield curve stuff. With the yield curve likely to be a major sort of debate going forward, expect sector, factory, and industrial reversals to continue until the economic policy paths are more certain. These things are not going to get more certain. It's going to be a long summer. If you are going to drive yourself nuts with this, and I know a lot of our patrons are not, but if you're going to drive yourself nuts with this up and down, you're going to go crazy this summer, because I'm telling you right now, things are not going to get certain in definitely the jobs market until about August, and without a doubt what the Fed's going to do until about August, because they're not going to do anything until their Jackson Hole meeting later this summer. So if you want to ride that roller coaster of emotion for another 8 weeks, have fun. But hopefully you have good health care, because you're going to need it to go check yourself into a mental institution. All right. Retail. Let's see. So this was a very poorly written article. It was very hard for me to read, but he made a couple of good points and good stats. So a return of the office. So this is for basically those of you looking to trade. When markets do get rolling, I typically like to look at like stocks like Ralph Lauren. I used to really like to look at Tiffany. I really always liked looking at Tiffany around the holiday season, Ralph Lauren around the holiday season. But we might get a little bonus here, because if people are in fact going back to work, it's like when your kid wants to go to school, they want brand new shoes and brand new clothes. This is kind of the same thing that I'm looking at with apparel. So let's take a look here and get to some of the highlights. It was a very hard article to read. JP Morgan expects U.S. apparel revenue to jump 21% this year from last year's depressed level, and to come in 6% above the normal revenue seen in 2019. A Jefferies survey shows that survey of women shows that more than 60% say that their wardrobes are out of style and they plan to do more shopping. So keep a watch on those companies. Probably Lululemon is one to keep an eye on, because they have dress clothes. Anywhere that kind of has the dressy stuff Stitch Fix service, anything else like Stitch Fix, those are the kind of things that you'll want to keep an eye on so we can try to get some runs on them. So if you're in the Bid and Ask Nation, maybe throw some ideas around and we can talk about that. Apparel has been deflationary good for decades, but in May, the prices were up 5.6% from a year ago, topping the overall inflation rate. Makes sense. Shortages of materials, shortages of shipping, on and on. Here's Lululemon. This guy said he likes Ralph Lauren. Like I said, I really like Ralph Lauren going into here's Stitch Fix. I really like Ralph Lauren going into Christmas, holidays, this and that. So it'll be something to keep an eye on. Lululemon does have the best pants, Mason. I have a lot of their pants, even though I rarely wear them because I don't like dressing up, and I can still consider them dress pants. But they're very nice. Don't at me. Inflation. Hedge for me as well established company, not crypto. Yes, that's correct. The US dollar. So going into last week, of course, the dollar skyrocketed because, well, let me just pull up the chart of the dollar. Where's the internet? Here we go. UUP. All right, so here's the dollar. Let's pull up the long-term chart. And this is what it did last week. So this was Wednesday. It skyrocketed after the rates. They said that they were going to increase rates. Of course, gold did the opposite, and these things just kept jumping. So today we're actually getting some kind of pullback. Let's see here. Where was that dollar article? So the dollar, after months of diminishing volatility, has left the dollar almost immune to the Fed's talk and data surprises. The world's deepest and most liquid market is back to being scrutinized both and just in the same time from the busiest weeks of the year. Okay, so this week's going to be a lot of stuff. Every week is a lot. Every week is just chaos. This is incredible, except for last week, Monday through Tuesday and Wednesday morning. So these Fed presidents from 3 different places are going to speak today before Jerome Powell testifies tomorrow in front of Congress. So I don't know what's going to come of this testimony tomorrow. I have no idea what this is about. I haven't done any reading on it. I think he does this quarterly or biannually. And they just figure out where things are in the economy. I don't think this is anything special. I could be wrong. I don't know. You guys let me know. Friday will feature a reading of Monday's central bank favored inflationary guide. So we're going to see this week is going to be more chaos for you. I think things are going to start to settle down because people are realizing 25 basis points over any time period. Hell, if you want to increase 25 bips right now, it doesn't matter. It doesn't matter. You can't be sitting at 0% inflation if you're saying that you have a roaring coming back economy, this and that, jobs are coming. You just can't do it. You can't have your cake and eat it too. Let's see. JP Morgan Global Future Volatility Index has climbed sharply since the Fed released projections last week. In a sign of what may come to this week, 2-year Treasury yields and the dollar jumped on Friday after Bullard said it may be appropriate for the central bank to start increasing the interest rates next year. Bloomberg said that the dollar slipped 0.2% this morning after jumping 2% last week. Data on Friday is projected to show year-on-year growth of core personal consumption expenditures probably quickened 3.4% last month from 3.1 in April, and that was the highest level. That April number was the highest since 1992. So do I think gold, silver, and palladium will jump back? Absolutely. I've said it before. I'm going to say it 1,000 times more. Gold, silver, any metal, it's a long-term play, 3 to 5 years. Guys, you're not buying this for the short term. And if you are, you're going to be subjected to these massive swings based on irrationality. So to me, I just put in my money in gold and I let it sit and I let it go. I've owned that thing for over a year. I haven't even looked at it. I don't even know where the accounts are. I'm assuming they're down now, but it literally doesn't matter to me. It's a long-term play and I'm going to let it be that. And once you get rid of your emotion, you can do that. here's Matthew. California is forcing people on unemployment benefits to start looking for a job in order to stay eligible next month. So, yeah, I mean, I think there's now 25 states or 24 states that are starting to go in some direction like this. So that's why I keep saying that August, September, that's the time frame where those that are living in the states that are getting, they're not going to have this COVID relief, this additional money anymore. That's when I think that those people that go start looking for jobs, this and that, it's kind of forcing people into work. That's when we're going to get the true number that's going to be coming out. And I think that's going to be end of summer, early fall. So coupled with the Fed doing what they're going to do as far as at their Jackson Hole meeting. So gold was up on Monday in Asia. This is on what I said on Friday. Gold is way more than a United States-based thing. You have to look at gold all over the world. Gold is up in Asia. I don't know where gold is this morning, but you gotta look all over. Gold is up in Asia, boosted by retreating U.S. Treasury yields. Metal was down. The metal was down 6% in the previous week. Let's see here. So I want to look at the 10 years after this. On Friday, Minneapolis Fed President Neil Kashkari said he wants to keep the central bank's benchmark in the short term interest rate near zero through at least the end of 2023 to allow the labor market to recover to its pre-COVID strength. Good decision, bad decision? I really don't know. Probably a bad decision, but whatever. Speaking of the Fed and all of this, you guys should go and read the book. Oh, today's Amazon Prime Day, by the way. So, Fed Up, Danielle. Here we go. You guys should read this book. Let me find images. This is the book. You guys should go and read this book. It's called Fed Up, An Insider's Take of Why the Fed is Bad for America. Danielle DiMartino Booth, she is an incredible economist. And she worked with the president of the Dallas Fed for a long time. And then she went off and started her own think tank. But this lady really gets it. Actually, her and this guy named Mohamed El-Erian, they're my two favorite economists. I had a patron, Palmer. He's like, yeah, my aunt is best friends with Danielle DiMartino Booth. So he got me a signed copy sent to me from Danielle. And it is now sitting right on my, right in my family room next to my other autograph photos of sweet people. So that thing is incredible. So thank you, Palmer. And thank you, Danielle. All right. Where are we here? Oh, this was the JK. This is a good one. U.S. futures rise as stocks as the Fed jitters ease. Okay, so everything went crazy last week. Just kidding. We're back to normal. U.S. equities climbed with European stocks on Monday as the markets found their footing again following the volatility spurred by the hawkishness of the Fed. Speculation that faster than expected tightening policies from the Fed will sink. Okay, this is boring. I don't want to talk about the Fed anymore. The Fed can do whatever they want to do. They're not going to listen to me. Somebody in the chat in the Bidnast Nation today said, I really like to think that the Fed is doing what's best for America. And I just go, that is so adorable that you think that. So adorable. All right, this guy, Mark Zandi, he's a Moody's analyst. And you guys, I don't like analysts, but if somebody gives a take like this, I have to pay attention to it. Beware of the inflation headwinds. It could take a year to break even after the 10 to 20% correction. I hope it's more than 20%. I think the majority of us do, unless you're just a Tesla fanboy. But the firm's chief economist expects the more hawkish Federal Reserve will spark a 10 to 20% pullback. Hopefully it's 20 plus. And unlike sharp drops over the past several years, Zandi anticipates a quick recovery won't be in the cards, particularly because the market is richly valued. He estimates this could take a year just to even break even. Despite his market warning, Zandi believes the economy will avert a recession because the downturn is more about risk of asset prices getting overextended more than a serious fundamental issue. So that would be cool, I guess. I don't know. Sandy sees little chance that the 10-year note will keep falling. I wouldn't count on rates staying at 1.5%. Let's see what they're at now. Where's the internet? Here we go. Let's see. So they're not out for today, but oh yeah, look at that 10-year note that fell on Friday. That's a big drop. And just looking at where we were back, I mean, that's almost 20 basis points going back to the beginning of June. The 3-month is coming up. So the thing that I'm noticing about this is these two are getting very close. They're not getting very close to each other, but they're inching close to each other. And I always talk about the yield curve inversion. Guys, we are far away from a yield curve inversion, but this is creeping up. This is creeping down. And when these invert, that is no bueno. So if we get some kind of yield curve inversion, there's going to be a correction. I promise you that. Actually, by the time the yield curve inverts, we're going to be in the middle of the correction. Let's see here. We have another possibly 2 years before the Fed starts to take action. It's maybe possible getting to that tapering of their quantitative easing that they're doing this and that. So where's the Zandy story? Zandy. Let's see. Inflation is going to be higher than it was pre-pandemic. That's why we need interest rates to go up. But what do I know? American Airlines cuts 1% of their July flights as travel rebound strains operations. All right. Please. Yeah. Thank you, Gianni. That was getting annoying. All right. American Airlines said on Sunday that it would cancel around 1% of its flights in July to serve a surprise uptick in travel demand at the time when the airline struggles with unprecedented weather. I don't know about this weather and labor shortages. Of course, we feel that the schedule adjustment will help ensure we can take good care of our customers and team members. So that's cool. According to the data from TSA, nearly 50 million airport passengers were registered in May, up 19% from April. So far in June, TSA has registered nearly 35 million passengers. And what day are we at? 21st? I guess they look forward also, but we're at the 21st. The company said some of its vendors were also struggling to keep up with labor shortages impacting the airline's operations. So, yeah, labor shortages are for real. But I do think that we're gonna eventually see a correction. I mean, not a correction. We're gonna see a fix in that, and we will go from there. So keep an eye on those airlines. They're incredibly overpriced and overvalued right now. But who says there's not more room to run on them? Who says there's not more room to run on them? Boom. All right. So here we go, guys. Bitcoin. I love this. Bitcoin fell 7% below 33,000 for the first time since June 8th. And this is the best. Here we go. Let's get into this. This is great. Bitcoin sank on Monday as reports that China has intensified its crackdown on the cryptocurrency mining. Okay. Many Bitcoin mines in Sichuan, I don't know, were shuttered Sunday after authorities in southwestern Chinese province ordered a halt to crypto mining, according to the report of the Communist Party-backed newspaper Global Times. More than 90% of China's Bitcoin capacity is estimated to be shut down, the paper said. Now this is just funny. Blah 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 blah. Calls for Beijing to stamp out crypto mining amid worries of its massive energy consumption. Come on, do you really believe this? I mean, they have a Chinese government. I mean, they have a communist government system. What they care about is that somebody's going to start competing with their currency. It has nothing. I was speaking with my father over the weekend, and we were talking about China. And when he goes there, and he's like, it's very difficult to breathe there. The industry is there. It's really bad. I'm not buying this. That's all I'm going to say about that. You can buy it if you want. An estimated 65% of the global Bitcoin mining is done in China. So this all comes back to that story that has stuck with me so much about the hedge funds by 2026. Hedge funds say that the majority of hedge funds in the United States say that they will be involved in Bitcoin by 2026. The reason that it's 2026 is because Bitcoin ain't going to be the format that Bitcoin is in 2026. It's going to be just some kind of something. And again, you can't have it. This can't be a currency. This is what you're doing. This literally doesn't make any sense. Okay. Here's your US dollar. Okay. Here's your US dollar. You're taking your US dollar to go buy a Bitcoin. Okay. This is the symbol, right? And then when the Bitcoin goes up, not going up anymore, but when it goes up, you sell it and you have more US dollars. So if somebody can explain to me how going from US dollars, buying a quote unquote asset, making it grow, making your US dollars grow, and then you come out with more US dollars, how is this a currency? Please tell me how this is a currency. Yes, you can exchange it, you can buy items, but you're buying items. You're still using US dollars. This doesn't make any sense. These people are wackos. The governments are going to just smoke them. It's going to happen. This doesn't even make sense. Just use some common sense. Sold my crypto and crypto miners green, not going back in. Good job. Very, very wise of you. All right. If you want to join our Patreon, here it is. And guys, we're going to hit, I personally think that we're going to hit 50,000 subscribers tomorrow. Might be on Wednesday morning, very, very early, but I think we're going to hit 50,000 subscribers tomorrow. Let's see here. So we are giving away a Tesla at 50,000 subscribers. So if you want to get in, you better get in today. If you join the Patreon, you're automatically entered in to win this Tesla. You got literally probably 24 hours. So $24 a month gets you all the software for free, enters you to win the Tesla, gives you discounts to other things, of course, gets you into our Discord, which is great. Let's see here. Bid and Ask Nation. If you want to join me and the Bid and Ask Nation, it's all about trading. I'm about to throw up some charts right now. You get access to an exclusive Discord community, $68 a month. You're going to make that money back in trading, I promise you. And if you want to do any kind of real estate consult with Paul, 10 G's, probably a good idea before you buy an investment property. So give me some stocks. I'll run through them and we'll go from there. Mo doesn't understand crypto and disruptiveness. I love it. Let's see here. EM has an insane about something. Yeah, it's nuts. It's nuts. What's up, Dinosaur Mo? What's up, bro? Hey, AMC bag holder. Guess what? I've traded AMC and I've probably made a lot more money than you have. So suck it. Let's see here. Veil. Let's do Veil. All right, Veil. So, have fun being poor. I don't think you know who you're talking to, but you can keep being ignorant. That's cool. All right. Let's see here. Veil. It's getting to be that downtrend. It's not there yet, but it's getting to be that downtrend. And let's see here. Actually, Seth, I wanted to go with that guy. So AMC bag holder that was ripping me. Unlike you, who needs to use your AMC money to probably pay your bills and do this and that, every single trade that I've made off of AMC, I've donated it to charity because I don't need it, and you guys are fools that trade that crap. So you're welcome. All right, so getting into a downtrend, but you're not there yet. Remember, to be in a downtrend, you need to be below this 80% level. So you're not there. So I would probably start taking profits, but you don't need to panic just yet. You're getting good volume, but let's see. All right. Momo. Actually, no. Let's do Microsoft and then Momo because Microsoft is getting to... it was trying to reach its all-time highs. See, it was trying to break through that resistance level at 264, but it was struggling. But you have a good uptrend. You're gonna need volume. You're gonna need good buying volume. Good news is you're overall 4 of your major moving averages, but you got to get something to break out. You really need something to break out. All right, now let's do Momo. Momo is this Chinese company, right? Right? Isn't that it? Let's see here. All right, so this one's tough because you're in an uptrend, but look at, you're sitting right below your 100 and 200-day moving average. This is a tough one. Take it easy with that one. Don't do anything crazy with it yet. Let's see here. Give me another one. Netflix? Let's check out Netflix. Alrighty. Ooh, I like that. Netflix is for sure a dog stock. That gap is going to have to fill. Tough. Of course, you guys know we got to get over all these moving averages. Netflix is going to be one to come around. We just need to wait for the institutions to come in. As soon as the institutions get in there, we'll keep it. But just keep watching that thing tight, and you will get going. All right. Intel. Intel for sure down. I mean, you're in a downtrend. You got to be real patient with this, but keep a watch on this one. You're sitting right at your 200-day moving average. The good news is, last time it bounced off your 200-day moving average, it spiked right back up. So you guys can see how much everything can hold at the 200. 200 is very, very powerful area. So let's keep it going. All right. Palantir, you really want it? All right, fine. Let's do Palantir. So before I get going, the reason I don't like the Palantir is because we're not even 200 days old. You can see I have my 25-day moving average, 50-day moving average, 100-day moving average, and there's no 200. So I don't like it because your chart kind of tells a story, an entire story, and we don't have that whole story. Right now, we probably have, 3 chapters of a 10-chapter book. So I usually like to trade stocks that are a year old if I'm going long on them, just because I want to have that information. But let's see what Palantir is doing. So it's trying to pop over that 100-day moving average. Let's go here and just see what we're going on this chart. So you're getting into this overbought area right up here. But your trend is still okay. You just need volume. If you get good, consistent volume, which Palantir really doesn't have, you need good, consistent green volume bars, and then this thing can start going. So, all right. This guy is epic. So epic. All right, Ruger. I like Ruger. Okay, so is Ruger making all-time highs, or what do we got here? Let's see what we got. All right, so let's go a year. All right, so Ruger was for sure a 50%er. So you had your high, you had your low, and then you had your mid-level right here. And you could see that it really struggled to break through. Every time it popped up, it sunk back down, especially here back in December. We popped up today, so this might, and we're getting good volume. Do they report earnings? No. I don't know what the news is, but you got a little gap up. So if you got a gap up and you're in this, if I was you, I'm taking profits on it. I'm taking profits on this because I'm taking advantage of this. I do expect a little pullback especially because you're going into the 50% area, and we will go from there. So, all right, guys, I'm going to get out of here. Let's see what we have going on today. I don't know what we have. We got a lot of recording tomorrow. We obviously have the live stream tomorrow at 1 p.m. Eastern time. And remember, guys, we're going to hit 50,000. If you guys want a chance to win that Tesla, join in the next 24 hours, because once it's over for this car. Then we have another one coming. So if you want a chance to win 2 Teslas, increase your odds, come on in there and get on it. So you guys have a great day. I will see you in the Bid and Ask Nation. Peace.